Morning, everyone, and thank you very much for joining. This is the morning market review. My name is Russell, Senior Market Specialist at FXCM. My email address is r@fxcm.com. And today, Wednesday, it's the 20th of July 2022. Just going to bring up our high risk investment warning. Keep this on screen for a few moments. Just to let you know, I'm probably going to take next week off. I think I'll put in some leave today. So just sort of a notice next week. We won't have the webinars. I'll be back the following week. Here's our market commentaries disclaimer. I'll keep this on screen for a few moments. And our references, MarketScope 2.0, CNBC.com, and of course, TradingView. We'll just go through the CNBC article. It reads, European stocks head for higher open as US rally lifts global sentiment. European stocks are expected to open higher Wednesday after a rally in US stocks buoyed sentiment in Asia Pacific overnight. The higher open for European markets comes after choppy trade on Tuesday as the relief rally seen in the previous two sessions lost some momentum. US stocks rallied Tuesday, however, with the market resuming a bounce from last month's lows. As traders bet on strong corporate earnings reports and wagered that markets have found a bottom. Shares in Asia Pacific jumped Wednesday after the sharp bounce in US stocks overnight. Besides the positive lead from Wall Street, there was also reports that Russia and Ukraine are nearing a deal that would end the blockade on grain exports, and that Nord Stream 1 is likely to restart gas exports on schedule after maintenance is completed. Back in Europe, the European Central Bank's policy meeting in Frankfurt on Thursday is at the forefront of investors' minds, with policymakers having given guidance notice of a first hike in 11 years. Still, this comes against the backdrop of slowing growth, the war in Ukraine, and threats to energy supplies. And we have the latest inflation from the UK. It is out. It's open 9%. It's really high. So that's something that is worth noting as well. All right, let's just take a look at the DAX, and do that. All right, so we've got a very strong week. Yeah, the DAX is bouncing off of this support level, and it's doing exceptionally well for the week. And the question, of course, is, has the market found the bottom? The CNBC article wrote that that traders are betting on a bottom. And I think what we'll do is we'll just put in some levels here. You know, obviously we can put in a fib. So that would be a 60 sort of 2% retracement. So we can keep an eye on that. That may be a level that proves to be important. Of course, the idea here is we need to see trend. It needs to be some sort of trend that suggests we're no longer trending down. We don't have that yet at the moment. We don't want to get ahead of ourselves. We don't have an uptrend. We've got a downtrend. We've got a 1 week of positivity in a downtrend. That doesn't make an uptrend. It doesn't mean that we haven't found the bottom, but I'm not convinced we found the bottom until we found the bottom, right? So if there is a bottom here, fine. I'd like to see the higher trough followed by the higher peak. I will be late I'll be late in. I'm okay with that. Rather be safe than sorry. Okay. So I just want to confirm the bullishness. Now, the trend is not up, it's down. Okay. Lower peak, lower trough. This could be that dead cat bounce. And with all the positivity that's coming through in terms of the media, if it is a dead cat bounce, it's going to cause some serious damage. And that could be the final capitulation before the movement up. So I'm a little bit suspicious. I'm not disputing the fact that we may have bottomed, but the truth is I don't know, and the truth is nobody knows, right? I just need a little bit more proof. Okay, so that's something that I just want to highlight, that don't get suckered into a sucker rally. Okay, and that's my worry. I need a little bit more proof. There is certainly scope for a bottom on the DAX. Certainly is scope. And why would there be scope for a bottom? Well, we just got to take a look at the COPOC, right? So we can bring in the COPOC, and we know that the COPOC is under that zero. Okay, we are under that zero. Let's just go to the monthly here. I'm just going to wait for the list to populate. I don't know why there's some, maybe it's a bandwidth issue, but there seems to be a lag in the morning. Okay, let's just put in the COPOC. Okay, so we can see we're on minus 6.42. Remember, that's only one of two requirements. We're going to one of two requirements. So calling the bottom, brave, if you've only got one of two. Okay, what's number two? It's got to turn up. It's got to turn up. So there is a lot of forecasters out there, and they may be right, but I think that the idea here is don't be suckered in by a suckers rally. Okay, we need a little bit more proof, okay, that we have bottomed. Again, I want to be very clear. I'm not disputing that we may have bottomed. We very may well have bottomed, but I don't know that, and I'm telling you, nobody knows that. Okay, so we just want to be very, very cognizant of that. Let's just get this at 0. All right, so we just want to keep an eye on that. Now, assuming we have bottomed, missing the bottom, if it's legitimate, okay, missing the bottom shouldn't make all that much of a difference. Okay? There'll still be lots of months for us to capture gains. So again, I want to stress, rather safe than sorry. Focus on the risk, not on the reward, and we'll come out with I think with a stronger approach. So that's the first thing to note. The second thing to note, of course, is that US markets haven't bottomed. Let's use the broader. Okay, so US markets haven't hit that 0 yet. Okay, so there is still scope for more movement down here. I would be more comfortable calling if there was a bottom in the media with a US COPOC negative. We don't have that at the moment. So just a little bit suspicious of the current movements. Again, happy to be proven wrong, but I'm going to favour the cautious approach here. Let's just take a look at the daily chart. Okay, so there's no doubt that the daily chart is showing some exceptional movement. Yesterday, very strong day. That's absolutely incredible day. So we've gone into zone 1, and we've actually broken the Bollinger to the top side. So there is a distinct risk-on sentiment at the moment, and not only is there a break of the Bollinger, there's actually a gap open here. There's a gap open here. So this is where yesterday's market closed. It actually opened over here, so it jumped, boom, like it jumped up. So you'll see there's a gap open. Okay. So the idea here is, of course, there is a lot of FOMO, that fear of missing out. Again, it could be something that is valid. I would just urge, to be cautious. If someone wants to trade on the long side, just make sure your stops are in and your risk management is sound. And of course, as long as the hourly stochastic remains elevated, above 20, then there is a distinct possibility that that risk on sentiment continues. But if it drops out of that 80, there could be some sort of fading. So just be aware of what's happening with the stochastic here. Another instrument I want to take a look at before we cross over to the crypto is Euro, because Euro is bound to move tomorrow. And what's happening is there is a ECB meeting, and there was news reports that they are considering 50 over 25. Again, I find that very hard to believe that the ECB will move 50 given the factions. Nevertheless, that is the report that's out, and the market responded to that. The market responded to that, and we've got this huge bounce in the euro, and this is the 4th day, 1, 2, 3, 4. But you can see that the trend is down. Okay, so we've got 1, 2, 2, 3, 1, 2, 2, 3. Okay, and you can see where this is going. 1, 2. Beautiful. 2, 3. Okay, so now the question is, what's going to happen from here? Which, if the ECB comes through with a 50 basis points, probably does get the euro up. No ways I'm not treating this without any suspicion. This is hugely suspicious, this move. Okay, so we've got a potential lower peak here. Okay. And what I would need to see for me to change my view here is an inverse head and shoulders, nothing less. So I would need this to go like that. I would need this to go like that. Now we've got the euro moving around, and what do we have here? We've got an inverse head and shoulders. Okay. There's the left shoulder, there's the head, there's the right shoulder, there's the trend change. Okay, but until that happens, there's no ways I'm believing this this euro story. It's absolute suspicious to the nth degree. So yeah, the market can take this up. I'm looking to get into a short position as soon as possible. I'm neutral now. I don't have any any positions on. But this is looking way too good to me to ignore for a short. So that's what I'm kind of looking at. At the moment, I'm neutral. Okay, I don't have a position on, and I'm not putting on a position right now. It's a big meeting tomorrow. Okay, so just to kind of give you a heads up of what I'm looking at, but this is looking really promising for a short. Okay, so we'll just see how that we'll see how this plays out. But this is hugely suspicious. We're going to go across to the cryptos. But before we do, are there any comments? You can see the market's very tough at the moment. Very tough. Okay. Any comments? All right. Nothing coming through. Let's conclude. We'll catch up in the crypto minute. Cheers, guys.